Hey, baby! Freak Network, we're back! We're back doing a podcast. Ken here, Ken FX Freak, and Joel. Guys, we're going to be trying to do this every week. Just general chitter-chatter, speaking about the markets, hopefully feeding a lot of knowledge to you guys. A lot more content coming via the freaknetwork.io and via the YouTube channel. So do keep an eye on that. Look, let's just jump straight into this. Guys, you probably haven't even really been fully introduced to Joel. Joel, tell us a little bit about yourself. Who are you? Who are you, man?
Well, hello to everybody that's subscribed to the Freak Network. I am the new employee, working with Ken now. So basically, I know you guys know a little bit about Ken's backstory. And I kind of have a similar backstory, although I'm not, obviously it's far down my career as Ken. So I graduated from university in 2018. I studied economics, and that was kind of where I got my interest in markets, you know.
Nice.
Because it was like...
What sort of stuff would you study in economics, though? So
well, the thing is, it was more theory.
Right,
It was more theory. But I did always like... There was stuff about, like, macroeconomics, and we'd be looking at data.
Do you look at, like, real examples, things that are actually going on, or do you look at, like, a lot of historical stuff?
To be honest, at uni, we didn't actually look at that many real examples.
Oh, really?
I found, like, since I started working in markets, that's where I learned the most, to be honest.
This is what I've always said, like, you know, I used to do a few things, as I said to you before, I did something for the London School of Economics.
Yeah.
And they love that real stuff, you know, real, you know, not
Exactly.
just theory-based, he's, you know, a lecturer teaching you out of the textbook, giving you real stuff, like being in the market.
Exactly.
They love that stuff. It's invaluable. Yeah, so, yeah, and then, Mike's dropping... all right, after university,
There we go.
completed uni, then what happened after
uni.
that?
Then I was trying to get a job in markets for a while, and I actually ended up landing a job at a company that you used to work at, which you know about. So Ken used to work at Randscorp, but how long ago did you work there?
That was back when I was 18, so at least 10 years ago.
About 10 years ago. So I worked at Randscorp for pretty much the whole of last year, but then... To be honest, I wanted a bit of a change in like the corporate culture, like you know what it was like. I wanted something a little bit more chilled out, more relaxed. I still want to work hard, obviously.
Yeah.
But
be careful what you're saying.
Exactly. Like obviously, my boss over it. But no, seriously though. But I just wanted something that was a bit more like, a bit more fun, a bit more freedom. Like what we do here is.
It's
really
great.
Cool.
I mean,
it's really cool.
The whole point of Freak Network, as everyone knows, is all about personality, breaking things down for people. You know, obviously respect Randscorp and companies like that. But I think they're more geared towards the older generation, people that are polished professionals in the market, hedge funds, so on and so forth. And you know, there's a big gap there for the retail market that are interested in finance, but they don't have that, you know, that bridge there. The bridge like what we're trying to do to make things digestible. So look, last week was this week. Well, it depends when you guys view this. But anyway, the latest week has been eventful, right, in the markets.
Definitely.
What have we all been paying attention to?
Oh, quite a few things. I mean...
the main thing, what's the highlight?
Well, okay, the phase one deal is definitely the highlight of the week.
Phase one.
In terms of like the big picture of the world economy and what's going on. Yeah. So, US and China signed this phase one deal. It theoretically puts an end to this escalating trade war, escalating tariffs between the US and China. However, now they've got to negotiate this phase two deal, which many, I mean, I think including us, think is going to be a challenge because there's a lot of there's a lot of sticking points they need to overcome.
It's funny because right now, like you note that challenge, but if you look, the markets are not really anticipating a challenge in terms of the moves that we're seeing, right? Stocks are still at record highs, and I believe they'll continue to pump, right? Same. For me, like my view is, you know, buying on any pullback dips that we see in the market. You know, I think that they will maintain that sense of optimism. AUD, NZD, right, benefiting as well. But then we were speaking about this, right? Gold. Everyone, from my Instagram, they love gold, okay? The updates on gold. At the moment, we were talking about this morning, gold's in its own world, right?
Yeah.
Gold's pumping. Yeah. It's pumping at the back end of last year, while stocks were pumping, while the riskier assets were pumping. Now, I think that was a safe haven for me as a hedge, but then you noted what as a potential...
So I was saying, basically, this is something we've touched upon a little bit in the last couple of weeks. Basically, since last September, the Fed has actually been injecting liquidity into financial markets in a way that's kind of like doing QE. So they've been basically doing these repo market operations where they've been offering short-term funds
Exactly.
to all these financial institutions, and they've been saying that it's not QE, but it appears to have had all the effects that QE has. So since they started these operations, the dollar's been weakening, stocks have been rallying.
And gold loves QE, right?
And exactly, like we're saying, gold loves QE. So I'm thinking, to be honest, it's difficult to know in like the short term where gold's going to go. But I definitely think as long as the Fed keep up these repo operations, there's going to be a floor under gold.
Indeed. Let's just quickly. So just I want to jump over because it's so funny. We were actually like in bits in the office, obviously earlier in the week on Trump. And just the way in which the ceremony was, like this, the fact they called it a ceremony, it was just all about Trump, and he just wanted the limelight. You could see he's obviously done his makeup there, and just the way he was delivering things, it was like he was doing an actual award ceremony.
He was naming all of his buddies and like congratulating them on nothing, just on being like a good friend.
Literally, let's have a quick listen.
Oh, they like me in Alaska, right? But they like you too, Dan, and thank you very much. David McCarthy, as you know, left for the hoax. Well, we have to do that, otherwise it becomes a more serious hoax.
And then throughout, he's just getting people to stand up.
Look,
here we go.
From the beginning, thank you, Mark, very much. Special guy, special friend, great wife, too. His wife actually supported me long before him.
Hey! Oh, God.
What does that mean?
That was brilliant. Yeah, so anyway, that was funny. What else we see? GBP slammed.
Yes.
GBP slammed, right? And,
yes.
On a couple of reasons. Firstly, obviously we had the poor data points, right?
Yeah.
What data did we have earlier in the week? GDP and manufacturing production.
Yeah.
And then the retail sales. So not good.
Sales.
So what does this mean for the Bank of England? What does this mean for the pound and the Bank of England?
Let's start with in like a little bit more than the last week, we've had 3 Bank of England members come out and sound a lot more dovish. So initially we had Carney last Thursday, and then we had Tenreiro, and then, excuse me if I butcher this name, but Vligy or Vlihi.
Yeah, I wouldn't have to say.
All of them consecutively came out. Yeah, mate. Oh,
yeah,
gosh,
no,
gosh,
just
I mean, she's like Dutch or something, I think. But either way, they've all come out sounding a lot more dovish in the last couple of days. Compounding that, we've had this weak data. So really, why is sterling come off so much this week? Well, it's because obviously we've got Bank of England this month, and the probability of a rate cut, that meeting, has risen from about, I think it was about 10% at the middle of last week to about 75% right now.
Yeah, we saw that this morning. It's crazy.
Yeah. It rose more this morning after that really bad retail sales data. So yeah, man, it's going
to be interesting.
It's going to be really interesting.
And it wasn't, obviously we mentioned those data points there, but you got to remember as well, inflation fell, right? Inflation fell.
Yeah.
So inflation falling, for those that don't know, obviously at the end of the day, if inflation's falling, it's putting the Bank of England further away from their target. So how do we get our inflationary levels, slash rates, pump money into the markets, so on and so forth, which is in the near term anyway, it's a negative for the pound, right?
Exactly.
It's a negative for the pound. So we'll keep an eye on that. At the end of the day, if they don't cut rates, right, the markets are largely pricing this in now, there's going to be a huge reversal for the pound, right?
Yeah.
So do be aware of that.
Yeah.
If you are listening, it's going to be a massive reversal there. What else we got? We have the ECB, right?
Yeah.
ECB, anything there?
Not going to be... So the ECB actually is next week. BOE, I think it's the week after. But anyway, ECB... not going to be as interesting, to be honest.
Yeah.
You'll probably see a bit of volatility in euro as you normally do, but nobody's expecting any change to their policy. The main thing I think people are getting excited about is this strategic review and what that's going to entail.
Yeah.
So it will be stuff...
From Christine Lagarde.
Exactly.
You know Christine... Sorry, just quickly interrupt you.
Yeah, go for it.
Like... looks literally like a movie star.
Yeah.
Do you know what I mean? She's
a very old movie star.
Yeah, but she's a very attractive woman. She's a very attractive woman, like for an old lady. But sorry,
she's doing well. She's doing well. She's got a remarkable tan as well. Like you got to give it to her.
Oh mate, look, just quickly. Sorry, I'm pulling up the calendar here now.
Yeah.
Next week, yeah, ready? Bank of Japan, obviously JPY.
Yeah.
Bank of Canada, CAD.
Yeah.
Thursday, ECB.
Yeah.
And then yeah, I mean, there's loads of data. Manufacturing PMIs, CPI from Canada.
Yeah.
It's endless.
You touched on manufacturing PMIs. I think the crucial...
Europe.
Yeah, the crucial moment for the euro next week will be that, not ECB.
Yeah, agreed.
Yeah.
Manufacture. The thing is with the manufacturing, it has shown over the last sort of month or so, or maybe even 2 months, it's shown signs of improvement, hasn't it?
Yes.
Yeah.
Yes.
After literally throughout 2019, it was awful, right? Firmly in contractionary territory. The big nations, Germany and France, right, contracting. And I mean, it's showing signs of stabilisation, but that's one of the key reasons Euro has actually hit quite hard last year as well. I remember. I just want to pull up where have we fallen. I just want to see last year's performance for euro dollar. Let's have a quick look. See here.
We're just in a steady downtrend for pretty much the whole year.
Yeah, I mean, literally the whole year. You're bang on there. Yeah, from January. Look, we're trading up at 115, and we reached lows in October down at 108. And obviously now we're hovering at 111. So
I forgot we went under 109.
I know. Mad, it was very brief. It's a very brief dip, but sucked back a VIN after. But yeah, I mean, it depends what happens with policy with ECB and Fed, because I don't know necessarily if we're going to have a big divergence this year.
I agree. I think we're probably going to be, in the long-term sense, we're probably going to stick within this range that we've been in like 2019.
Yeah, and I think if you think about it, really, the next real committed breakout for Euro is going to be dictated on, who does what next, really, right?
Yeah.
They're both going to sit on their hands for the time being.
Yeah.
I think, if anything, the Fed are more likely to do something, right? More likely. Obviously, inflation's still far away.
Yeah.
The bar's very high, I know. But the ECB are miles away, right? They're miles behind.
From hiking, you mean?
From hiking.
Yeah, exactly.
Before doing anything hawkish. So yeah, I mean, it'll be interesting to see what happens to euro dollar. I'm still favouring downside for euro. I want to see us challenge that 108 region again, those lows in October.
Yeah.
I shouldn't see why not.
I mean,
data looking solid from US.
Yeah, exactly.
It's improving.
It's difficult to say, because I think what's really going to get euro dollar out of this long-term range would be another significant divergence in growth between the two sort of areas. So, like, why did we come off those? Do you remember we were in like the 120s in 2017?
Yeah.
Why did we come off there and come down into the 110s? Well, that was because US growth picked up. Do you remember Trump did his tax cuts?
Yes.
And then massive fiscal stimulus. US growth picked up.
Well, weren't we hiking then as well? Was it in 2017?
They were hiking too, exactly, as a result of growth,
That's
the hot
right.
labour market and all this kind of stuff. And at the same time, Eurozone growth started to slip, and that's why we came down all the way down to like the 110s. So I think you're going to need some kind of divergence to happen again to get a long-term move like that.
Long-term, exactly.
But I'm just not sure it's going to happen.
When it's going to happen.
Yeah, because like US growth has been slowing but seems stable. Eurozone growth, like you were just saying a second ago, like seems to be stabilising. So yeah, we're gonna have to wait and see. And just trade it as it comes, I guess.
Yeah, exactly.
Yeah.
All right. Well, look, we've got plenty on next week, guys. Look, we just touched upon a few things here, just a general chitter-chatter. We'll always have some key themes that we talk about next week, by the way. So make sure you are subscribed to the YouTube channel. Keep an eye on all the socials and freaknetwork.io. A lot of the posts, we post blogs in there, make things quite interesting rather than you just trying to read Bloomberg, CNBC, so on and so forth, which is absolutely dead. So keep an eye on freaknet.io. It's true, it is.
It's so true.
We're going to be doing something every Tuesday Trivia Tuesday. We haven't decided what way that goes around. But basically, we're going to see who's the fundamental king of the week, right? And we're going to be testing each other of things that have happened, key events that have happened, things that we should know, right? We should be aware of. And there's going to be a forfeit. And I actually ordered yesterday of Amazon, so those will come soon. We're going to be doing the forfeit. We're going to have these different levels of hot sauce. So whoever gets them wrong has to do a little teaspoon of hot sauce. So, look. Great speaking. Other than that, guys, have a smashing week. Let's get it.